Hello traders, welcome back to my channel. In this video we're going to be looking at order block refinement. So I'm going to share with you a step-by-step rule on how to refine order blocks and get those super snapper entries. So make sure you watch till the end. Don't skip any part because I'm literally going to break everything down. I'm sure you wouldn't want to miss that. This is UCFX. Welcome back to my channel. This channel is all about helping forex traders get acquainted with the necessary information and knowledge on how to become profitable in the forex market. So if this is you interested in contents like this, subscribe to this channel and turn on your bell notification icon to be notified anytime we upload new videos. And make sure you drop in the comment section any topics at all that you would like us to make videos on, and do that now because you might forget. So without further ado, let's get into what we have for today. So here we are on the real chart. This is the USD JPY. So this is an actual trade of 1 to 8 risk to reward ratio. So I'm going to be breaking this trade down starting from the higher time frame. So I'm going to be practically showing you how to, understand order block refinement using this trade. So let's start from the daily chart actually. So here on the daily chart, price was actually in an uptrend. And after that, we had a price distribution. So the smart money actually distributed price to actually entice buyers. Oh, if you actually don't understand this distribution or WYKCHOFF distribution, I suggest you check the link replacing in the description below to understand more about WYKCHOFF distribution and accumulation actually. So each time the smart money or the market wants to reverse, it normally distribute price. The smart money normally distribute price. Why do they do this? They actually do this to bring in buyers so that they can actually sell. Remember, before you can be able to sell in the forex market or in any market, you need a buyer. So they need to present this market or price in form of a bullish trend to bring in the buyers to actually come in and thereby taking them out and initiating their reversal movement. So here we have series of high being taken out, and we have a kind of support. Then we have here as well a kind of support. So all these areas are actually levels of inducement, looking from a buyer's perspective or a less informed trader's perspective. So they are actually enticed to take on series of tons of positions inside this area as a buy order. So they came back here, give this little tiny movement upwards before they actually broke down. So this is the area that we actually interested because there was a grab of our liquidity. All these buyers were actually taken out. So looking at this point, we have a break of structure, which is the most important thing that we actually needed. So we had a break of structure, and we will be focusing on this area because this is where we will have our order block. So we'll be using the H4 time frame to actually refine this order block because it's kind of not clear on the daily chart. So we're going to be using the H4 time frame to actually refine this. First of all, let's tag this our break of structure. So we had our break of structure, which is our BOS. We had our break of structure. So we are now interested from this point to this point. So let's refine and look where we have our order block on the H4 time frame. So here we are on the H4 time frame. As you can see, we have a neat order block formation inside this area. So we're going to be marking it out from the highs to the lows, and stretching it out. There you go, we have our order block. So we're going to be tagging it our H4 order block. So, two objectives met: order block formation, break of structure. Then after that, what do you want to see? You want to see a grab of liquidity and price coming back to your order block or your discount levels. Let me explain that. Before price would actually come back to your order block, there must be liquidity. The smart money needs to trap traders to actually come back and tap into this order block or come back into your discount levels. They actually needed sellers in this case to actually tap into these discount levels. So here we had a liquidity in form of equal highs. So why do we consider this as a liquidity? We considered it as liquidity because here price tested this area, went down, came back again, kind of did this little move upwards, came back, and came back again, did a tiny rejection, then came back here, give this huge pullback. Then after that, price went up. So most traders were actually thinking that this price is going to move down from here, and they were actually taking out. So after your order block formation, break of structure, you need to see liquidity formation and a grab of liquidity before considering taking any trades. So here we have our this area as our equal highs, or as our liquidity, sorry. So in form of equal highs. We have our liquidity in form of equal highs. Then after that, you want to see price come into your discount prices. What are our discount prices? Our discount prices are the 0.786 and 0.618 of the Fibonacci 2. You want to see price inside this zone because we enjoy buying at discount prices. Likewise, smart money like selling or buying at discount prices. So we need to be interested in the discount levels. And as you can see, the discount level is just directly above our liquidity after liquidity was actually grabbed. So then after that, you now need to go down to your lower time frame. After price tapped into our discount level, you now go down to your H1 time frame to actually refine and get more tiny stop loss, all those tiny stop loss to get more tiny or sniper entries. So here on the H4 time frame, on the H1 time frame, after price tapped into this discount level, we had a break of structure. So we need to actually see the exact same thing that you saw on the higher time frame, which we are order block formation, break of structure, liquidity in form of equal highs, and a tap into your lower time frame order block. So basically, we are going to be seeing all this stuff that we marked out on the higher time frame in the lower time frames. So this is actually how you refine your order blocks. So we are going to be using our 15 minutes time frame for this refinement because after marking out your points of interest on the higher time frame, from the 15 minutes time frame down is actually where we the time frame that we use to refine other blocks the more and get those super sniper entries. So let's hop on to the 15 minutes time frame. So here we are in the 15 minutes time frame. So we had a break of structure, and after this break of structure, we need to mark out the other block that took out this structure, that took out these lows. And then we have this other block. So after this other block, we are going to be tagging it our M15 other block. So we have our M15 other block. We have our M15 order block, just like we had our H4 time frame order block. So we are having our 15 minutes time frame order block. Then after that, we had a break of structure, POS. And after break of structure, what next? You need to see liquidity in form of equal lows, equal highs, sorry. So we had liquidity in form of equal highs. So we have our liquidity. Let me just mark it out as some liquidity. So we had our liquidity in form of equal highs. Then after that, we are looking or waiting for price to come into discount prices. So we take our fee from these highs to these lows. And as you can see, price came into our discount prices, the 0.786. So it slightly took it out a little bit, but that's still in place because we still have our other block here. Then after that, you can as well go down to the M5 time frame to refine more on this. But okay, I will do that as well so that you can get a tighter, you can learn how to get more or a tighter stop loss. So we had our liquidity being grabbed in form of equal highs because most traders were actually trading or selling from this area. And this is practically during the Asian section. So I don't know why a trader would be trading the Asian section because me, I don't trade the Asian sections. So there was actually a grab of these highs, which was formed during the Asian section, then and a tap into our M15 time frame order block. So let's hop on to the M5 time frame to see if we can spot an order block, break of structure, liquidity, and stuff like that. Because this is actually where we are interested in. So this actually happened during the London New York overlap, I think, yeah. Because mostly there is usually a grab of the Asian highs. And I did a video talking about the Asian liquidity. So we need to check it out and understand about Asian liquidity. So this has to do with understanding Asian liquidity as well. So let's go to the M5 time frame. So here on the M5 time frame, after a grab of liquidity, price took out these lows. So price took out these lows. Then where is the other block that actually took out these lows? Here we have the other block. So this is let me change the color. This is our M5 order block. So here we had our M5 order block. Then we still have our liquidity in form of equal highs. So practically you see the same stuff over and over again. So this is practically the way you need to or what you need to see to confirm an entry. If a trade will actually work, there is no way that it will not give you this kind of price movement. So you don't need to just hop into a trade all because of FOMO or whatever. So you need to practically see specific price movements. So we have this break of structure on our M5 time frame. Then we have our liquidity in form of equal highs as well. Then on a tap above this liquidity, entering our discount levels. So we take our fib from this place to this place. And as you can see, price nicely tapped into our discount level, which is a 0.618, a little tap into this discount price. So mostly in the lower time frames, you wouldn't be seeing much of a tap into discount price, like going, just like we saw on the higher time frame, tapping into the 0.786. Mostly on lower time frames, it would actually be a kind of a sharp movement, because here we are talking about lower time frames. Lower time frames are kind of, snappy and all those stuff like that. So we had this tap after this highs was taken out. So this is actually the place that you will be taking your entries from, and your stop loss will just be above above this M5 time frame order block. So you'll be practically having 20 pips stop loss. So then where do we take our profit? What would our profit take profit where would our take profit be? So our take profit will be considering the H4 time frame to see the last low that was formed. So here we have the last lows that was formed. So we need to be targeting this area, because price can easily reverse from this place, because we have still have imbalance inside this area. You still have imbalance that price can actually reverse or make a movement from. So you can actually, cut or take partials starting from this point, because you don't know what will actually happen after price taps into this area. Just like we have here, price is already reacting from this point, but I don't think price would actually move up, because we still have imbalance inside this area. So we'll be targeting the lows, the recent lows formation, which is actually here. So this trade is actually even 1 to 9 risk to reward ratio, almost 1 to 10. So this is practically the way you can refine your order blocks and get tiny stop loss. So it's practically, it's not rocket science. It's what you can actually do yourself, backtest and understand. So you need to see the same stuff, just like I explained from the higher time frame: order block formation, break of structure, liquidity, discount prices. Then you use your lower time frame, starting from the 15 minutes time frame down to the M5 time frame for your refinement. So, and I hope you understand what I've actually explained in this video. If you actually do, give this video a thumbs up, comment something, something special, so that I will be actually encouraged to make more contents like this. And don't forget to subscribe, because we need you in this community. We need you and you need us. So it's actually a relationship. So we need to build this community to make more traders understand how to trade better. So don't forget to drop in the comment section any topics at all that you'd like us to make videos on. We're hoping to hear from you. So see you on the next video. Yeah.